house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Style is the bomb, daddy bomb, bomb, bomb.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Statman.
Good morning, ladies and gentlemen. Morning, good morning, good morning, everybody. I see Carl. Good morning, Jay. Good morning, EP, Jeff, Drez, Pat Trades, Chitaki, Max, Brooke. Good morning, Scotty. Hey, if you guys are listening, watching in for the first time, or if you watched already every single week, let us know where you're watching from. Let us know if you're trading NASDAQ. Let us know if this is your first time ever seeing statistics, or if you just love trading statistics, let us know in the chat. We have a guest trader this morning. We're going to get into our analysis. So I'm going to break down what I see. Then Mickey's going to break down what he sees. Then we're going to bring on guest trader this morning, Chris, the creator of NQ Stats. Good morning, Mickey. How you doing?
I'm good, man. I'm good. And it's always exciting to have somebody who trades completely different than us, but uses stats to trade with, like kind of join forces with them. And, you know, it's just awesome to be surrounded by people that like to take that objective view of the markets over the discretionary view as well, man. So I'm excited for this. And he's a veteran too. So huge shout out to him.
And that's very rare. Veterans that use statistics in day trading. You guys know how how niche down that is. It's crazy.
The only other one that I know is like Christy Macro, and we've had him on. We can have him from live trade with us sometime.
Oh, dude, you need to shoot him an invite. Yeah, he came
definitely.
in a couple months back for the Discord.
Mm-hmm.
All right, guys.
I
Well,
think
without further ado,
do you think there's a reason why veterans trade statistics?
because we don't like to leave subjectivity open for what is the word I'm looking for? Open for interpretation. Yeah, because we do everything methodically. We don't want to BS something, right? Like for you guys in your career field, it was life or death. For us, it was misdiagnosing patients. We need objectivity to be able to consistently perform the same task, and you can't do that if every time you're doing it, it's like, this looks good, this feels good.
Yeah, I think for us, it was always rehearsing the variables, the different possible outcomes, every single thing that could happen on the battlefield on that mission, right? We had to rehearse it as a well-rehearsed ballet, even as serious as like somebody on our team dying, like we had to rehearse, we had to be able to perform that under pressure. So it's having that that game plan for any possibilities, and then prioritizing which one is the most likely course of action. And then, what that kind of leads to the decisive point of the operations as well, just like we do in trading.
Yep. And then you just rinse and repeat, and you never look back.
Yep.
Never look back. That's the biggest part, is when you guys find an edge, you don't look back. What's up?
I think that's another thing, that because the military is the way it is, right? You can smell out bullshit a mile away, right? So I think that's why a lot of veterans are successful in the trading space, because there's three types of phases that a trader goes through. They go through the education phase, the trade phase, and the compounding phase, right? Most people don't ever make it out of the education phase. They'll sit there and strategy hop forever and ever and ever. Right? Veterans tend not to do that, right? They're like, they can smell the bullshit a mile away, and so they just figure out what their aha moments are, and that gets them into the testing phase. Veterans tend to struggle more getting out of the testing phase because they're trying to find too many variables at once, right? And so I think that's an edge to being a veteran, is that you're not going to fall for 90% of the bullshit that's out there. Yep. You're going to take that war game approach, that rehearsal approach, but it's getting out of that whole, testing phase. Like, okay, there's a million different variables that could happen. You don't need a war game for all of them. You need to like make it a little bit more simplified.
We don't like to overcomplicate it.
Mm-hmm.
Yo, I see. Hold up here. Is it Mr. Duff himself? What's up, bro? Dude. So this is actually really funny. This dude, I have known this guy. Oh God, 4 years now. Over 4 years. This dude was one of the first people I ever messaged, and I was like, should I start a YouTube channel for trading? And now he's here at the live stream. That's funny. Good to see you here, bro. Good to see you here, man. Good morning, everybody. What's up, Second? What's up, Ziggy? All right, guys, and we'll get into a little bit of the analysis and then pass it over to Mickey here. So, first thing I always do, we start on the hourly time frame. Am I above or below midnight open? Because statistically, we retrace the midnight open more than we don't between the hours of 8 to noon. So because when we're above or below a statistic, okay, I want to know, where is that catalyst? Where's the potential catalyst? Where's the reason that we could start to experience the direction towards the statistics? So if I'm above statistics, I'm looking for reasons or live price to tell me potentially downside movement, and vice versa. If we were below statistics, I'll be looking for objective reasons for upside movement. And so the only thing I look for when I come to the hourly time frame is I'm looking for, if we're above statistics, bearish footprints. Now, what is this? This isn't anything crazy. This isn't complicated. No, the market does not move this way. No, the market makers are not creating these bearish footprints. They just, a group of people, algorithms, whoever's able to move the market in a 60-minute time span, that's pretty significant to me, especially when it comes to NASDAQ. So that's why I call these footprints, because they are. There is a footprint of something or somebody that took this candle all the way from here and slammed it back down to here before we closed this hourly candle. And so if I am looking for anything that may be bearish, if there is something that gives me context, this zone is going to tell me, if we come back into this zone and then we start to reject this zone, that's going to be added context for a reason that maybe the sell pressure is starting. Okay. And that's just purely just giving me an area of reference. There's no statistic behind it. There isn't anything data wise. It's just where in an area on the chart that we have already, sold off pretty quickly, right, with some speed. And if we come back here, could we do it again? Then I break down to the 5-minute chart, and I just want to see my highs and lows of days. So do we have the current low of day? Because us as day traders, we are trading the fluctuation of this daily candle. This candle bouncing up and down on the 1-minute time frame, 5-minute time frame, same thing on the daily time frame. We're watching, it's just in slow motion. We're watching this daily candle decide if it wants to be bullish, retest the open, bearish, retest the open, bullish, but we're just watching it in slow motion. So us as day traders, that's what we're doing, is we're trying to trade the little wiggle. All right, we're trying to, when the daily candle goes from here to here, we're trying to trade that profitably, or from here to here, we're trying to trade that profitably. And so if we're trading the daily candle, then it would make sense that we would want to know, is the current high or low of day in statistic or out of statistic? If there are repeatable statistics of when we make and lock in highs and lows of days, what times are those to make that the wick on the bottom and the wick on the top? So today we have a low of day right here at 1800. That's an in statistic low of day, because typically we make the highs and lows of days statistically between 4 major time periods. 1800, okay, market open. And these are all just very common sense, right? 1800, that's when everything opens up for the future market. Then you have the 3 o'clock, that's London market, market open, the New York market, and then market close, power hour. So this is what I like to call an in-stat low of day. And then the current high of day that we have right here, I'm just move the footprint aside a little bit here. We have a high of day at 6:45. So generically, the 4 major times this does not fit one of those major times. So it's just a process of elimination. If I know that this is an in statistic low of day and this 645 up here, if I go run the numbers, you'll find 645 isn't that high probable chunk of time that we are locking in a wick or a high of the daily candle. And so I would call this an out of stat high of day. And then what this allows me to do is going into the market open, which then leads me into the next step of my analysis. Where are we at within statistics and how do they align with these highs and lows of days, and what could market open do to fulfill the rest of these statistics or disrespect these statistics? Okay. Key word, disrespect. Okay. Because you can see right here in the past 76 days, this is the midnight snap. Okay. The link to get this is a free indicator I released over 2 years ago. Actually, yeah, almost 2 years ago. Link is in the description if you want to mess around with it. But you can see in the past 76 days, we've retraced midnight open 70.7% of the time. There is an equal probability on the other side of the coin, right? There's still a 30% probability that we don't fail or that we fail that midnight open. And so we need to let live price tell us the times that this happens, but then also the times that it doesn't happen and what those key signatures are. So if we come up to the upside, and the statistics that I look at here is now, if we have an out of stat high of day, what statistics are telling me that we can come up here and take this high before coming down to take this low? Well, right now we have P12 high. This is a very important level for the day that we use. And I'll let Mickey, I won't steal Mickey's thunder with that. I'll let him go into that. But we have 4 major bullish levels here. This is an indicator we use in the pack that just gives us statistics on very specific levels every single day. And so we have 4 very high probability bullish levels that we can come into. And so then this would make a lot of sense that if market open comes up, so if we come and take these levels here to the upside, we lock in the next major time to make a new in statistic high of day, which is around market open. This box that I'm using is just representing the high and the low of the first 1 minute candle of market open. So let's say we open up the market somewhere around here. So then all of the statistics left to the downside would be left open. You see how there's just one side? There is just one side of the market that now becomes very obvious versus if I were to try to make a trade decision exactly in this very moment, we're kind of in between statistics. We're in between probabilities to come up to here, and we're in between probabilities to come to here. And when we're in between statistics like that, I like to let live price just make it easy for us. I'm not going to click a button. I'm just going to sit on my hands and let this daily candle tell me what's obvious, what isn't, and what's conducive to the edge that I'm trying to apply in this market. So if we come to the downside, the reverse scenario that we just went over here. So instead of coming to the upside, making an in statistic high of day, if we come to the downside, what does that look like in terms of statistics? Well, we have coming to the downside here, a level, all statistics stacked below. We have opening prices 3 a.m., 1 a.m., 4 a.m., 5 a.m. These are the probabilities that in the past 76 days, what's the probability that we retrace the 5 a.m. starting at 8 to 12? 84%, 80%, 70%. So we have a lot of probabilities that if we come to the downside, we can visit all of these checkpoints. And so then the icing on the cake is the daily profiler. And again, I'm just going to go on the surface level. I'm going to let Mickey go way more in depth into this. But on the surface level, we still have the New York 1 left open. And so this is the final trigger that's going to give me the highest probable edge in terms of how I'm going to trade and manage risk around market open. If we come to take this high, we will be New York 1 long, which then leaves an even more probability of revisiting this low. If we take this low, we're going to be New York 1 short, which is going to give me an even more probability that the high of day is not locked in yet. And then around market open, if we open up around here, leaving this out of stat high of day, I can then start targeting a potential new high of day. And so then this leads me into my next and final point for the day, which is my trade ideas. So I just kind of went through in a very, very in-depth way. You guys watch me post the analysis on Twitter. I kind of just did the analysis portion kind of in depth so you guys understand the context of everything that's on my chart. And then Now my trade ideas. So you guys know I like to go and give multiple scenarios for my trade ideas. It's not because I'm trying to trade every wiggle of the chart. It's not because I'm trying to click the button many times. It's because I want to account for this market dynamically, because the market is a dynamic environment. This market is not static. I think it's very goofy to have a bias. I think it's very ignorant to look at something that is as volatile as NASDAQ and think that we can only choose one direction. When this market bounces up and down, changes directions at the split of a second. So I like to give multiple scenarios that, in my opinion, give me high probable price movements. And then I can transfer those into trades that give me confidence that I don't have to think about in the current moment. And this is why Mickey and I love what we do so much, is because it gives us peace on the charts. It gives us objective reasons that when the market is open and when these candles are moving a lot more aggressive, I don't have to react to price. I don't have to think of the best trade to take in the moment. I've already planned for all the different scenarios. Just like if you were to play chess, you've already looked at your opponent and looked at the second and third and fourth move, not the next move, but the second and third and fourth scenario. The same thing we're doing here on the markets. We're trying to see, as our market is our opponent, what's the opponent going to do? If our opponent comes up here, what's the second and third and fourth round effects that could cause? If our opponent comes to here, what's that second and third or fourth round of effect that we can then structure a trade around? So trade number one, so my trade ideas is trade number one is if we come to the upside, taking New York 1 high at 25,845, taking these levels to the upside, we would be locking in a potential in statistic high of day at market open. And then if we get below market open, I'll be looking for extended cash flow shorts to the rest of the statistics to the downside, in combination with New York 1 going short at 25,811. And then trade idea number two is if we come to the upside, we make market open as an in statistic high of day, and we stay above market open by 9:45 to 10. I'm discounting all of these statistics to the downside unless we get back below market open. And by that point, this is a common signature of a DMPDWP style day. And I'll be looking at cash flow longs to the upside above market open for continuations to the long side. The final trade idea that I have is if we come to the downside and we start correcting early. So if we start getting these statistics early before market open and we don't get that firecracker move that we're looking for, but in fact, we go short for New York 1 and we open up the market somewhere around here, I'll be looking for extended cash flow shorts to above market open for a potential new high of day. And then I will be hands off, depending on how we break to the downside. I will most likely be hands off for anything short to the downside. And if we just got that scenario, then I will just happily sit on my hands, because I don't really see anything as far as if we open up the market, somewhere around the P12 mid, and then we start breaking below here. This is my clueless area. This is me saying I am a fraud, and there is nothing for me over here. So that is my trade ideas. Mickey?
All right, let's go. Good breakdown, dude. All right, so starting on the daily, right, and using candle science, we have a 200 handle gap up at all-time highs, so that's always fun to deal with. But processes don't change because all of our systems were built as the NASDAQ was making all-time highs every single year, every single month, whenever it did. So all-time highs doesn't change how I trade as an intraday trader or the process I do, right? It's all the same, right? There is some headline risk that we do consider, but that's like the vulnerability system. And I think that's the vulnerability of a lot of systems out there. But biggest thing I can say is just know when to turn systems on, know when to turn systems off, and know where those invalidation points are that says that your trade process is wrong, and just take your business expense of the day, and that protects you from all headline news events, right? All right, so moving on, we use candle science, right? Which is just the ability to take any asset, any time frame, any number of candles, to do a look back. So I'm on the daily chart. I said, what did Thursday and Friday do in relationship to today? And what are the probabilities for today? So we can see that there's a 65% probability that we're going to be bullish today. And if, you don't need stats to look at a 200 gap up to say, maybe we will be bullish today. All right, but we already know we took out previous day high. So now it tells us the probabilities of the open, high, low, close of the daily using Thursday and Friday to determine what the day is going to bring, right? And what the probabilities of the daily candle are. So we can see that 65% green day, right? Meaning that we're going to have a green daily candle. There's a 57% chance that we close above previous day high. There's a 67% chance that we close above previous day settlement. There's a 78% chance that the low will be above previous day low, and a 94% chance that we close above previous day low. There's a 72% chance that the low will be above previous day opening, and a 92% chance that we'll close above that. Right, so that's the context of using Friday and Thursday to determine the stats of today's candle, right? And you can get this as early as 1800. Actually, you can start, 1800. Like, start filling it out, right? We usually do it at 5:30 in the morning, if not earlier. All right, so we can see from a trend mode, right? We're above previous month 50%. We're above NFP Friday, so we anticipate higher prices from an intraday standpoint, right? Just like when we met those conditions here this last month, we expect 70% of our days to be green and 30% to be red, right? You can see it right here, right? So what does that tell us, and why does that matter as an intraday trader, right? Well, that 70% of green days statistically put the low of the day in between 1800, 03, 9:30 to 10:30, and then we can anticipate an afternoon close or high day, right? And that's how we transfer the knowledge on the daily chart in a simplified format to our intraday trading. All right, so moving on, right? Right, we can see right now that Asia, right, ignoring the gaps, like I have statistics of gaps, and we're going to talk through that during the process. Asia went long, so it's bullish, right? London started to go short, but reversed, so that's bullish. So we have markets that agree. So the Tokyo markets, the London and the Frankfurt market said, yes, keep bidding it up, right? So that gives us a little bit more edge today, because now we know, like, all we have to figure out is where price is going to net off of if it does decide to drop. Doesn't have to drop, but statistically it will drop, right? So we got a couple of levels that we're going to use to figure that out right now. We've got London OU, which is the midpoint between the 230 and 330, Asia OU, which is the midpoint of 18 to 1930. We have P12 mid, which is the halfway point, the halfback, the CE, the whatever you want to call it, the midpoint of the 1800 to 06. Gotta sneeze. Dude, I never get to the mute button in time. So thank goodness I got to it that time. My sneezes are loud and obnoxious, right? All right, so we're going to start looking at the probabilities based off of what Asia and London does. Which one of these have the higher probability of getting hit, and by what time, right? Because we know there's a high probability that we do eventually come back down here. And then does that lead to a bounce, right, at the London OU, or the P12 mid, or even the Asia OU, right? And then we're thinking of this as turning systems on and off, right? If we bounce off P12 mid, like as we start heading down this way, like, yes, we can take the sell, but our job is to align ourselves with this, right? We know that by 11:30, we should at least on any given day know where one side of the daily candle is. And we should be able to identify, are we in the body of the daily candle, or have we not put a high day, low day in yet, right? And then we should align our trades with that, right? So coming over to the daily profiler, right? Right, we can see that London was long true. Asia was long. Let's reset. Start with our long true, short false. Right, we can see that that Asia OU has, just out of this right here, right, Asia OU has a 75% probability of being broken. Now we can come over here, right, and we can see that, oh, well, like second most, it gets hit between 230, the median and the mode to the left side of the data, meaning 50% of the data is left of this line, 50% of the data is right of this line. We can see that 50% of the time when we hit it on before 5:30, it got hit between 230 and 245. To the right, where the 50% of the data is, we can see that there's a signature here that says, hey, 930 to 945, right? And if you want to include the rest of this data, right, you can say, hey, right, all the way to 1030, and then you go into anomaly zone, right? So there is a high probability that Asia is touched, right? We can see that London has an 87% probability, right? But majority of the time, right, it gets hit on the left side of the median, right here between 730 and then, you know, by 830, 50% of the time has already been hit. And now as time ticks on, right, the next highest probable time for it to get hit is 930 to 1015. And if we can't hit it by then, momentum is strong to the upside. And look how many, like, you're in an anomaly lane when it comes to hitting it. We know that London OU is right here, is above Asia. So if we can't even come down and hit London OU, then we're not going to come in and hit Asia, right? So now let's do it from the P12 level approach, right? Come over to the levels, right? We can see as it stands right now, we've already hit the P12 high, right? We've hit the P12 high, and that's, oh, 1 minute. All right, cool. We've already hit the P12 high, right? So we've already know that stat of 87% is accounted for. Now we're trying to see that what's the probability and what's the time function of that P12 mid? It's 80%, and it has not been hit yet between 6 and 10:15. We can see the mode sits to the left of where we are, right? The secondary mode sits to the right. So this supports a possible sell-off between 9:30 and 10:30, right? So we can see right now that these three levels, right, are going to be very much responsive for to see if we can net off of it and bounce, net off it and bounce, net off of it and bounce. And then if we can't bounce off of any of these levels, like now we can start considering P12 low, gap fill, right? So now we have probabilities for that, right? We come to Monday, right? We can see that Monday, right, which is kind of weird because, like, usually Monday we've been all strategies revert to the mean and expand. They have a variance to them, right? A year ago, Monday used to be a high probability, you know, settlement fill day, right? It still is, but based off of what Asia and London does, shows us that there's a 50% chance that we do get that settlement fill, right? Now, if we do 25, 50, 75, and 100% of that gap fill, right, we can see on Mondays, we do get a boost, a 15% boost of the gap fill based off what Asia and London does, telling you that when we do this scenario on a Monday, you get 15% more gap fills, right? But for now, we can see that 25% has an 80% probability. So if we can get below London OU, get below P12 mid, get below Asia OU without bouncing, right? There is a possibility that we hit that 25% level, right? That we can target, right? Now, that's where I'm at for this, right? We still have 4 possible scenarios because this is 730 to 830 box that it can do. It's just sitting here ranging. It has not broken out. We like to wait for it to give us 2 of the possible scenarios, right? So instead of trying to figure out, are we going to go long true from 830 to 1130? Instead of figuring out, are we going to go long false, make a new high of the day by 930? That's 2 of the scenarios. Rather than, do we go short true, right, or short false? That's the 4 possible scenarios. We like for the market to show its hand so we can do the process of elimination, and not, instead of having to put the probabilities on 4 statistics, we only have to do it on 2. So right now, we're just going to wait, right? We know that if we come over to wargaming, right, we can see all 4 possible scenarios with the P12 high, the mid, the low, the Asia, the London for each one. So this one suggests that that 1800 is the low of the day and they expect a high of the day at the end of the day. This one definitely suggests that, right, once the 930 opens, if we get above the 930 and we can't get back below it, these probabilities of the downside drop dramatically, and the highest probable market structure for the next 3 hours is up. And then we know that 10 o'clock we can't rely on our quarters because we have a deep retracement followed by a yank up, right? We do long false, right? It still supports that low of the day at 1800, but we expect a high of the day between 9:30 and 10, and we can expect 3-hour structure from 9:30 to 11:30 to be down with a possible third-hour effect to the upside during the 11. Right? If we get the sell, right, the short true, where we can't get back above 9:30, and we definitely aren't getting back above the 7:30 8:30 high by 11:30, we can see that there's low of the days. Let's zoom in on this. There's low of the days that are supporting 10:30, 10:45, and 12 or end of day, right? We can see with this one, all those levels below us have really, really high probabilities of getting hit. And we can expect the high of the day to come between 7:15 and 8:30. Right now, I think our current high of the day is at 6:45. So we sell, can't get back above the 9:30, right? Like can't do the 4-step reversal after we go short. We know that that is more likely to be a true, and that's when we can start turning sells on, right? And start extending our TPs for the sell. We know for a short false, right, we dip below that 7:30 and 8:30 range, right? And then we start yanking up back to the upside. And this is where those levels will be key. It looks like the P12 mid is where it bounces off of the most. If not, well, the London OU is where it bounces off the most. Conveniently, that's the closer target than the P12 mid, then the Asia OU. Now, different days will support different things. But this one also supports that low of the day at 1800 and end of day, high of day. So we can see that 3 of the 4 possible scenarios support that low of the day that we currently have at 1800. 2 of the possible scenarios support the end of day, high of the day. One supports a high of day between 9:30 and 10:30, and one supports that the high of the day is already in, right? So this brings us to the plan of action of, right, how we're going to play the 9 o'clock hour, right? We're going to say that this is the 9:30 candle, right? So the 1 minute 9:30, because the 1 minute 9:30 happens every single day. So everything I do is off of a fixed constant, meaning it happens every single day, so I can perfect my decision making and turn systems on in a clear, concise way, right? So how we're going to play this is going to represent the 9 o'clock box, high to low, right? Let's say 9:30 to 9:44 gives us a buy, right? Right? For me to turn on sells, we have to do 4 things. For me to lock this in as that long false, make a high of the day, right? Not saying I'll trade it this way because I can start positions up here. But if I am starting to see the reversal and to confirm and lock in that high of the day, I do the 4-step reversal, right? So step 1, can we get below, oh my gosh, 9:30? Step 2, can we get below 9 o'clock's 50%? Step 3, can 10 take out 9's high or low? And step 4, can we make a Q1 instat high or low? Right? So regardless which one of the 4 scenarios we get, right, if we can do this, then we're expecting, right, let's say we break out of that 7:30 8:30 range to the upside, and then we do the 4-step reversal, then we're obviously expecting the long false and playing the long false playbook, right? If we break out to the upside and we can't do the 4-step reversal, then we're expecting the long true. I'm going to play that playbook. Let's say the first move we do is breaks to the downside. If we can do the 4 steps, then we can play the playbook for the short false. And if we can't do the 4 steps, then we play the playbook for the short true, right? So it's that simple, right? Like decision making does not change regardless what for the scenarios that we do, right? And so yeah, that's where I'm at right now. I'm going to be patient and let this show me. It's looking like it's going to go with the long out of the 730 to 830 box. So we know that the highest probability for that, if we select the long, right, there's a 68% probability that we go false, right, between 9:30 and 10:15, right, 10:30, right. What we can do is we can wait for that 4-step reversal, right. We know that that false, right, going back to the wargaming, so we can see it, the false has happened 68% of the time, and the true has happened 31% of the time. So now we have a clear way of defining which one is going to go with using that 4-step reversal if that's the way we decide to go. We also see that between 9:30 and 10:15, we need to be looking for that 4-step reversal because this pivot statistically happens the most between 9:30 and 9:44, but it does have high probability of being a 9:44 to 10 o'clock, 9:45 reversal or a 10 to 10:15 reversal. And we've talked very detailed about that in the boot camp. So that's where I'm at today. So I'm going to sit on my hands and play it just like that. If I do get a long false scenario, like I would trade the 9:30 to 9:44 the same way every single day, right? But then like based off of what scenario we get for the New York one will determine I pause during 9:40 to 10 o'clock, and then I'll play the 05 boxes. Once we can start getting trend in one direction, if that's the way we want to go, then I'll start turning on systems like Captain Backtest or the 3-hour line versus the Apex, and then play it like that. Yeah, so right now I'm just going to keep my mind open. Like I can say that, you know, this market can be a long true all day long, no matter if we have a 300 handle gap below us, no matter how far Asia and London has come up already, because it hasn't really come that significantly high. But I am going to keep my mind open until the market starts showing its hand. I mean, it becomes obvious that like my risk will stay low, very low, and that my TPs will be cash flowing TPs until I have a good understanding of how this daily candle wants to look. The one thing that we can say is like right now is looking more like we're in the body of the daily candle, but I'm going to wait because the market hasn't shown its hand yet. All right, that's what I got.
I think one thing that we all need to make sure to remember today: do not get married to this gap.
No,
At all.
absolutely not.
This big old thing right here is what everybody's probably sitting here trading toward. And actually, this is a great segue into introducing our guest we have on today. He said this one time when we were trading, and it's very true, and I think aligns perfectly with what we do using stats. Is dude, we don't care. We trade the daily candle, right? Like we don't care about all this other noise. We don't care about all this other stuff. Like this daily candle is still going to print, and it's still going to make the highs and lows within the time. Most of the time, it's still going to make the movements most of the time that we track. So don't get too caught up, guys. And just because there's a big gap on your, if anything, just
trade your process.
Just trade
your
process.
risk profile. Make sure your risk profile is like built. Like you should have already built your risk profile. Understand how much that business expense is. And if the statement gets triggered, like trade it. Right? If it's time to turn that system on or off, like trade it. Is Chris in the room yet? There he is.
What's up, Chris?
All right. So a little bit understanding, like we've already talked highly of you, but like it's such an honor to have Chris on here. Like I can't speak nothing. I can only speak nothing but high things. This individual started off in the Marine Corps. He's one of the very few individuals that like I respect in the trading space. Like he trades a live account, right? He understands position sizing. He understands following that repeatable workflow. He understands statistics, and like it's just an honor to have you trading with us, Chris. And he's a badass. He's a badass shot on handgun and rifle.
Oh yeah, I do okay. Hey, I appreciate that. Can you hear me? Is my mic working?
Yeah, man.
Yes, sir.
Doing good.
All right, cool. Thanks for having me on. So let me see if I can get a screen share going here. Figure out how to do this. I've never streamed on YouTube before.
It's kind of like Discord. If you click that little button in the middle, and then I'll just turn it on.
All right. Let's see here.
Yeah, he shoots really good. He does good in both paintball and airsoft.
Yeah. Is it working?
There you go.
Can you see my screen?
Yes, sir.
All right, cool.
You are also the first guest that we have had on that's now going to share their screen and go through it with us too. So this is pretty cool.
All right, cool. So this is what I'm looking at the moment. If you're familiar with my NQ Stats platform, then this might make sense. If you're not, you can learn about it at nqstats.com. It's just a free website with some statistical analysis and data. But going into the day, or going into any day, my day starts at 8 a.m. Typically, I'm done by noon. But if there's not, anything forming that I like, I might wait till post noon and take something in PM. But typically, I'm done by like 11, noonish, because either this ALN trade has happened, or IB, or a noon curve trade has happened, and those are 3 trend continuation stats that I use, which I'll talk about quick. But it's usually done by noon. But anyways, going into the morning, so 8 a.m. starts. We're about an hour into that time frame. So looking at the chart right here, it's just there's a lot of time-based ranges and pulling stats from those. Before I get into what these red and blues are, I'll just talk about how I view price. So I look at it as a rubber band. If you hold, a line out, horizontal line straight across the screen, that's your session open. And then price is going to stretch up or down, right? It's going to go up or it's going to go down. It's the only way it can go, or it can go sideways, but I mean, it's going to form range up and down. So what I'm looking for is how extended is it to the upside and downside, and how much range is left in that particular, box of time. So in this example, we're looking at a day's information. So these horizontal upside lines, 0.5, 1.0, et cetera, et cetera. Those are standard deviations of the net change of closes for a day, so for a full session. So I know that we're starting to push up and get a little extended to the upside, but that doesn't really mean anything because you can trend all throughout the day. So also dropping down to a 4-hour, looking at the same distribution data on a 4-hour, seeing if we're extended to the upside. And then an hourly as well, seeing if we're extended to the upside. Now you might catch trades during a trend if the market is trending up and it's overextended on the daily and say the 4-hour. You can still catch a trade if you're starting to go extended down on the hourly, right? So if you're moving up and then a new hour opens up and you push down, you make a little open low before it goes for the high close to continue the trend. So what that would look like on an hourly would just essentially be the same thing. If I turn averages on, now it's going to add a little bit more information to the chart. So I can see, if you're familiar with like stat map or any of those other open, high, low, close indicator tools out there, this is essentially that, where I'm looking at mean, median, average highs and lows for that particular time frame. So for an example here, this would be a day. So red would be the high, or red would be the high of a down bar. Red down here at the bottom would be a low of a down bar. So, and also over here on the right, you've got a little gray box with a fill gauge, and that's your average range for a 60-day look back. So I can look at the top left corner of my screen and see right away we're extended a little bit to the upside because we're above the open, approaching that plus 0.5 standard deviation. So we're extended a little bit on the day up. That doesn't mean anything without knowing how much move more the day could go. So I can see top left on my screen, and the day is only 43% of its 60-day average range. So I know there's a lot more that this day can go. And as long as price is staying within a plus or minus 1.0 standard deviation, so anywhere from up here to down here, that would be considered a normal day. So all that range in between, that's high expectancy for price to go anywhere up there. Typically, you'll see pivots at the 0.5s. But as long as you're within that 1.0, so anywhere from here to here, you're within a normalized distribution of price. Now that all might be a little confusing, but this green fill gauge and how much is left is to the upside or downside is shown by that unfilled gray part. So that unfilled gray part is it can go that much more up or it can go that much more down before it hits 100% of its 60-day average range. So this day, in summary, this day has not moved much. It's only moved about 40% of its expected move. So I know it still has a lot more to give. Now, is that going to be given to the upside or is it going to be given to the downside? Well, that's where distributions come into play of knowing if you're extended to the upside or if you're extended to the downside. So that's some context of just how I view price from a high time frame, even down to a low time frame. So looking at a day, a 4-hour, and a 1-hour. This is also relevant to the week. So if I bust out a weekly view here, same concept. You can oftentimes see where the week will put in its open high or open low before it expands for the rest of the week. Those pivots are a lot of times going to be right in that mean median 0.5 distributions area. So somewhere maybe if this was going to be an open high, low close week, I'd be expecting some type of move up into here and then push down throughout the rest of the week. That would be normal. That would be what you would see most often. But that's if you're trading a lot bigger range, swing trading, or something of that nature. But on an intraday basis, what I've just talked about is pretty much how I view price. Now, getting into the specific stats, let's turn some of this noise off. All right, so getting into specific stats, this is ALN sessions. It's just a time-based range looking at different boxes of time. And so on my website, NQ Stats, there's 3 boxes of time. There's the Asia session, the London session, the New York session. So based off, there's only 4 things that Asia and London can do. Right here, you see pattern 3. Pattern 3 is if the London session partially engulfs the Asian session to the upside, which it's doing here. So you've got, it's a higher high, but a higher low, right? So it's only partially engulfed to the upside. It didn't fully engulf. So that's a pattern 3. There's only 4 patterns. It's either going to do that, what it's doing right now, to the top side or the downside, or London's going to be inside Asia, or London's going to engulf both sides of Asia. So it can only do 4 things. And based off of the 4 things it does, you'll have expectancy for what New York session is going to do. So we're in New York session right now as it pertains to this time box. I start this time box at 8 a.m. to account for New York pre-market volume, and this will run until 4 p.m. So we have not taken the London high yet. And since we're in a pattern 3 dictates over the last look back period, which in this scenario I've done 10 years. So 10 years of data going back to 2015 from 2025. Anytime you've had a pattern 3, there's roughly 79% of the time New York broke the London high. So what I'm expecting, and let me make this a little more zoomed in. All right, so what I'm expecting here is, here's the high that we're looking to break 79% of the time, and I'm looking for price to come up and take that high. Now, is it going to take that high? I don't know. You're going to have to use your own entry criteria, your own entry triggers, your own strategy, but that gives me expectancy. That doesn't give me a strategy. That just gives me where I should expect price to go with a high, a high confidence. Now, if price comes and takes the low first, which is not really looking like it's likely to do that, but it hasn't happened yet, so you don't know. If price comes down and takes this low first, right, the London low, then the probability gets reduced to about 50% that it will come back and take that high, right? And if the New York session, which we're currently in, it has a probability of 79% of taking that high. If it comes down and takes the low first, that probability of coming back to that high is now about 50%. 51% of the time, New York broke the Asia low. So about a coin flip of the time, you're going to expect it to come all the way down to Asia low. And about 35% of the time, New York engulfed the entire overnight session. So that would look something like this. It takes the high out and then it goes all the way down and takes the Asia low out. So all of those are very low probable moves. The highest probable move here is just coming up and taking this high. When you're in a pattern 3, right? So a pattern 1, a pattern 2, a pattern 3, a pattern 4, they all have their different, stats, but this one is favoring breaking this high. So that's my expectation, is that we're going to take this high. This high then becomes my profit target. Now I just got to find a way to get into that trade, to get into that long, to run along up to that profit target. And that's where a little discretion comes into play. So I use price action in my trading, and not the ICT price action, but old school price action, right? Your Richard Wyckoff, looking for trend continuations, pullbacks, momentum going into, pushing out of a pullback. I use basic price action to get me into these trend continuation trades. So like ALN sessions, which is the stats on the screen here, that's a trend continuation trade. Most of the time, it's pushing in a direction, right? So there's your Asia box, and and then you got your London box. So it's formed a pattern 3 because it's trending in a direction, right? And if you were doing a pattern 4, it would just be doing the opposite, going down, forming that pattern 4. Pattern 1 would be that London has engulfed both sides of Asia, so it's a little more volatile. Think of like your broadening formations. That's what that would look like when you zoom out. But right now, we're in a trend continuation framework here. So I'm just looking to see if price is going to give me an entry. And what that would look like for me is seeing 50% retracements of the prior leg that has broken one of the pivotal highs. So when you're looking at just basic price action, right, just looking at trend continuation type movements like that, what I'm looking for is a pullback that falls within that 40 to 60% range of the most recent leg. So in this scenario, you're moving up, you're pulling back, you're moving up, you're pulling back. And when you're pulling back, where are you pulling back to? And are you coming out of that pullback to set a new high? So as we pull back, where is that pullback coming to? And what I'm looking for is a 40 to 60% pullback. So it taps right into that, and it comes up and breaks that high. So that high is now the, quote unquote, in control high. So this is now the in control high, and this is now the low out of the pullback. This high hasn't been set yet, right? We're looking at this as like a hindsight. This high hasn't been set. So we're coming out of that pullback, we're moving up. Where are we moving up to? Well, we're going up into that London high. That's where I want to see price push up to that high probable target. So as we're starting to push up into that high, and then I take my exit. And then if I'm looking for another trade, let's say it's a IB based trade or a noon curve based trade, whatever the case may be, I'm looking for trend continuation. I'm still looking for those 40 to 60% pullbacks, and then push up out of that into that target. So how this would look on, this is ALN stats. It's a bigger, it accounts for overnight time, Asia, London, and then pushing into a New York session. So looking at something a little more zoomed in, like if we're looking at a day, a singular day, I took this trade. I believe I was talking about this trade live on your session the other day. This was the 23rd. So what was this, Monday or Tuesday? But can't remember what day that was. But anyways, this is what IB kind of looked like. So this is a 1 minute chart. What we were looking at before was a 15 minute. This is a 1 minute. So you can see kind of the same framework here. As IB is starting to form, this is a new stat. This is initial balance breaks. So this is data around just IB, that time-based range. So as prices, starting to form, and you wouldn't see the IB box yet, right? Because it hadn't formed yet. But as prices starting to move up, right, you're watching that trend continue. And then now you're into about 9:50, approaching 10 o'clock. So if you're going to take an IB trade, there's two things you want to look at here, specific to IB. And that is, did the low or high, when IB closes, or you can get it a little early if you're anticipating where it's going to close. So in this scenario where you're down to like 10:20, 10:25, it's kind of clear that IB is going to close, probably somewhere in the upper half. But that's one of the criterias. So did the low or the high form first? Well, in this scenario, the low formed first. Did you close above 50% of the IB's range? We did. We closed right here. So those two scenarios, when you set the low and the low first and the high last, you have about a 70-ish% probability that it's going to be a high break. Vice versa, if you close the IB range in the upper half, it's about an 80% probability it's going to be a high break. And just in general, without even talking about what side is going to break, you're going to break IB 96% of the time before the day is over. So before 4 p.m., you're going to break out of this box 96% of the time. And this is all based off of historical data, 10-year look back. And then
it's still even pretty high, like even by, I think you say noon, right?
yeah, by noon. But I'm done usually by then.
Yeah.
By noon, it's 83%. So by the end of the day, it's 96. By noon, it's 83%. So if the market, if the market goes and it closes its IB right here and just chops around for a bit, I know there's an 83% probability it's going to break out of this box. So it's either going to break that high or it's going to break that low 83% of the time before we get to this vertical line. So now I use the other data to give me a bias of what side is going to break, the high or the low. In this particular example, it was the high. And this was the long I took coming out of this pivot low down here. I posted it in your chat that day. So coming out of here, as the market pulls back and starts to push up, I'm looking for entry criteria and entry triggers. I get mine. So I enter the trade, and my expectation is to just run it up to IB high, which would be an exit once that IB high is broken. Now, where did that pullback come out of? Well, if you look at where's the most recent price leg in terms of highs and lows. So coming out of this low, you put a pivotal high in, a low, a pivotal high, a low, and then you're pushing up. If you look at where that retraced to, that pullback right there came into your 40 to 60% range. So I'm just looking for a pullback into that 40 to 60%. Right here, it hit pretty much 60% on the dot. And then looking for a push out of that to continue the trend. So
we got a 5-minute warning, by the way. 5-minute warning, market open.
Yep. So ALN sessions, IB, and noon curve data. That's all on my site. They're all trend continuation stats. That's what I'm looking for. I'm looking for those pullbacks to get long on. That's how today will be. So ALN sessions, not really looking for a trade there, just based off of. So it's a very low volatile day. Monday, today's no news. So you're coming into a new week with no news. I'm going to wait for the New York Open. So I'm not looking to take, even though this is high probable, I'm not looking to take an ALN sessions trade pre-market. Now, if that high stays in place, that'll become a profit target for post New York Open, if that makes sense. So this is going to be a profit target. Now, if we start getting into the IB time frame, like around that 10:20, 10 o'clock, looking for an IB trade, this could still be a scale out or a profit target, but IB is also going to be the profit target. So you could have multiple stats overlapping, giving you multiple profit targets. And that's the way I trade. So just with some proper risk management, good position sizing, I risk 0.5% of my account. So it would take me like 200 trades in a row of losses to blow my account. It's never going to happen. But with that, a little 0.5% hitting, 1, 2, 3 R per trade, those little base hits stack up. You can easily double or triple your account in a year with very minimal risk management and just focusing on base hits.
So that's one thing I definitely want to. I want to take advantage of you being on here. I know we had a great conversation of how like the prop firm mentor, like what would be a really good year for most live traders, right? People who trade prop think that it's a mediocre year. And like, when did you talk about when you learned the secret of base hitting and what that did for your trading and position sizing and all that?
Yeah, so I've always been a base hit trader in futures, but I was not in penny stocks and options. I was trying to go for the Hail Marys, right? And I learned a lot of hard lessons in the options market. And then coming to futures, I focus more on base hits. So I've kind of always been doing base hits and futures, but to me, it's what can I get the most consistency from? I don't. Yeah, maybe you can make a lot more doing Hail Mary swings and stuff, or maybe not. But your equity curve is going to look crazy. It's going to look like a heart monitor. So for me, what is the most consistent way I can trade? And that's focusing on base hits. If you do the math, right, to take 100% gain on your account, to take your account from $1,000 to $2,000 or $10,000 to 20,000 or whatever the number is, to grow it 100%, you can risk 0.5% of your account per trade, and as long as you can collect 3R a week, right, just 3R a week, and most of you probably take one trade that can give you 1 to 3R. So if you can make 3R per week, risking 0.5% of your account, you can double your account in a year. If you double your account in a year, you're beating every hedge fund out there, hands down. The best hedge funds in the world are probably doing 15 to 20%. The market on average does 10. So if you can 10x the market's average return, then you're doing phenomenal. But back to the opening there, the prop firm market kind of skewing expectations. I think the prop industry has skewed expectations by making people think that doubling the market is not good enough, right? Like they have to make like 1000x on their account or else they're a crap trader, which is so bad of an expectation. It's just not, it doesn't even make sense. And I think that comes from a lot of prop traders, these prop influencers or whatever that post their P&Ls. You know, they got like 10K on it per account, 20 accounts, they just made 200K, and people see that and they're like, oh, that's the norm.
Yeah.
That should be the expectation, when it's not.
When a lot of them don't even show the full story. They don't show that they bought 100 different prop accounts.
Oh, yeah.
80%
Well, a lot of them aren't
fell.
trading. They're just flipping.
They're prop flipping. They're prop flipping, right? And so, like, going back to what you said about your P&L volatility, right? Those swings, like in every single big trader or successful trader in the past, all the way from Livermore back in the 1800s, he'll tell you, if you're not properly position sizing, following repeatable workflow, and just like controlling that portfolio volatility, like you're going to have huge swings, which lead to non-consistent performance, right? So that's a huge thing to like consider.
Market is open.
All right.
All right, there's your ALN session. So if you longed anywhere post 8 a.m., you just hit that London high profit target. So that 79% probability is now complete.
Yeah, it was really funny. I didn't want to like interrupt you because you were doing really good at like explaining everything. But one thing I wanted to point out, and this is why I kind of really enjoy having guests on, is you can see other perspectives, but it's kind of like we speak the same language, just different accents, you know, because one thing that if you guys didn't notice, Chris was saying was he was looking for that pullback to continue higher. The statistics we're looking for this New York one low to get short. Right now we missed it, didn't happen, but it was pretty cool to see. All right, market open is 0.16%, so this is like around the moderate range of defining my risk. So for me anyways, if we break above market open, I'm just going to wait and be patient for that 945 to 10 to see if we're going to continue higher, because statistics do say, I don't care what your favorite guru is saying on Twitter, statistics say this is a good high of day. And so I'm going to be patient. I can't define my risk for longs there's not enough meat on the bones for me to take a long here. So I'm going to be patient and see, okay, if we have this in statistic high of day at market open, and then we come to the downside, I'll be looking for breaks lower. But if we break to the upside, I'll be flat until 945 to 10 to see if we stay and continue above. What's up, Nick?
Yeah, so I'm just looking at, we got the high of the day, 0.7 to 0.90 off of Globex Open. This is the highest probable high of the day for the scenario. Right, so I'm just seeing, can we get up there? Can we get above 10 basis points off the 930 open? Can we get into this high of the day and then do the reversal? If we start breaking on the downside, getting below 930, all that good stuff, I will take shorts to London OU, P12 mid, and Asia OU. And it's looking like this. We are starting to get that way right now.
I mean, that was a perfect high of day if we just wicked that.
Yeah.
Did you account for London being broken on your projection?
No, not yet.
Okay, because I think that's what mine is, just a tad bit different than yours.
Okay. But yeah, like this took out that London high, as Chris said, right? We got less than 5 basis points above it, so we definitely can get some more upside movement if it wants to, and then we reversed, right? So we do have to be aware that for the long false, right, it is supporting the current low of the day. So I'll definitely be aware of that. But once we turn this thing false, the next 3 hours are projected to go down, and then 11 o'clock's reversing if that's the way it wants to go. So I'll be quick to take cash on these shorts if I do take a short. Let's see, I'll at least take 10 basis points off the low, which would take me to right below London OU, right, if I do engage in a short. Right, but right now, if we can't do that, the one thing that's standing out to me, right, is that we cannot turn this false, right? This 7:30 to 8:30 that typically we turn false, we can't turn it false right here. We went 90% of the way and then reversed, right? So this is, unless we start turning it false now, like that 9:45 to 10 o'clock drop off for turning the same false, like will be a thing that I consider, like if we stay above the 9:30. Let's see, it looks like it might be coming now.
Yeah, so somebody asked IB is at 9:30 to 9:45. It'd be 9:30 to 10:30 Eastern.
Yeah, the initial balance.
Okay, we're breaking through the 50 and testing 75. All right, guys, if we get a break below this market open right here, depending on where we close, okay, so the closure is going to define my risk and my target, but depending on how we close, we got 50 seconds left and we're breaking below now. Depending on how we close, I'll be targeting a portion of this move towards midnight open in Asia OU right here. We just got to see how we get this close. And then also how far we close below market open will also dictate, obviously, where I'm placing my stop. I'm already decreasing risk because of how market opens 0.17%. Ten seconds left. All right, I'm taking this short.
I'll join you with 2, but then I'm looking to add on the next 5-minute retracement in the 9:30. But I have 2 open contracts right now, micros.
I'm going to target, make sure my stop is in place here, 850. I'll place my stop at 847.50. And then I'm going to target midnight open, just a portion towards midnight open, so 763.25.
All right, let's see.
Be 0.18%.
Okay, I'm going to target P12 mid. If I can't add, see if we can get price back at the 9:30.50 right here, and then I'll add 3 more.
So this is where I would be looking at, if I'm in trades, it's where I would be looking at how much range is left. So this hour, it's 9 o'clock hour, it's only moved 21% of its 60-day average. When you're just looking at 9 a.m. hours, so just the 9 a.m. hour, this hour has only moved 21% of its 60-day average. So it could still go a lot in either direction. But once it starts to get closer to that 100%, you got to start considering, okay, start closing trades out, and so I'm not going to expect this hour to go more than it normally does. At least that's how I view it.
Absolutely. No, that's a amazing way we use it. Distro's a little bit different, but like it's still the same concept. So we kind of like I measured the 930 to 10, right? We can see over the last 4 weeks, but I usually look at the last quarters, right? So the last 14 weeks. Let it load up. Right, I pay attention to like how far that 930 to 10 moves, right? And it doesn't want to load up now. Okay. So it usually moves 97 handles at 0.39. So we made 50% of that. All right, and I might get stopped out on this 2 contracts. Let's see how we negotiate this.
Where'd Austin go? Did we lose him?
I think we might have lost him.
We did, yeah.
You know,
Yeah.
internet in West Virginia is a silly thing.
Yeah, so I know you're managing a trade. For me, the ALN session stats is closed out, and I didn't take anything. So next window of trading for me would be looking for an IB trade. So I won't even be looking for that until 10, 15, trying to see where IB is likely to close, and then joining the trend. So
Yeah, that's
right now
my
I'm just sitting
second
on my
trade.
hands.
That's usually my second trade. Like, so I take the 930 to 944, right? But then, like this one, I'm just gonna let get stopped out. My risk is above 931's high, right? But then I'll always literally pause between 945 and 10 to do exactly the same thing you do, man. Absolutely. And if you're a younger trader, that's probably the best thing. Not saying that you're younger, Chris, but like that's the highest probable time to place that trade. And like 930, like my 930 trades, like I reduce risk to like very, very low position size unless I'm 100% confident, right? So like right now I have 2 micros on, right? Like I don't care about going full leverage or not. Number one, I never go full leverage, but I never care about getting that 5% risk per trade on at all, ever, right? Doing the 930 to 945. Because I know that 10 o'clock and that 945 will show the continuation if it is going to happen. There he is. He's back.
There we go. You back? Oh my god, dude. Restream was keeping me in jail or something. Can you hear me? Good?
Yes, we can.
Okay.
All right, so I'm going to stop myself out on this 5-minute high right here that's being taken. If we get a close above 25, like I'm just going to stop myself out because this couldn't get below 10 basis points, right? It could not, stay underneath the 930, right? Like everything's, maybe it's going to go with me. See, Murphy's Law is so great. I'm glad I just didn't place my stop there and get stopped out. Right, but if we do start getting closes between 25 and market high, I'll just scratch the trade for about $120 loss, and that's okay. That's funny.
Elm, do you have a question, or are you just saying something to say something and not actually contribute? Because I feel like I've seen you here before, and you just want to say dumb shit.
So negative R, let's talk through that, right? Like, so negative R, there's nothing wrong with that. Like we
not even
literally
hold on. Let's even address the major thing. Do you guys know how fucking stupid it actually sounds when you say negative R? It's still a positive number. Anything above above 0 is positive. So if you're going to talk about or even troll, at least troll when it makes sense.
So one of the cool exercises that we do during phase 2 in the boot camp is we make the students, we take a bunch of different common strategies, right, around each hour between 9 o'clock hour all the way to the 1500 hour. And we give them the scripts and all that and the code. And we say, hey, go find, like, if you're going to take this, just trade this hour, right? Use the last 10 years worth of data, use the last 1 year worth of data, use the last 6 months worth of data, and use the last 90 days worth of data, and go find, right? And what they usually find is that for a trade to be in a trade for just an hour, right? Like, let's say you trade 1 hour, right? That negative hour risk profile supports that. And the longer you're in the trade, that's when the positive hour gets supported, right? From a price and time standpoint.
Sorry,
Take it
technical problems get me heated, man. And then when I see somebody saying retarded shit in the chat, though, all right, negative or ads. Yeah, it's fucking YouTube.
All right, so this is definitely in jeopardy of a 15-minute doji, right? So I'm just going to go in and close flat. Like, if we can, this last push down, but like my business plan for the 930 to 944 trade is I'm out at 945, right? We've already shown that, yes, this definitely is looking like it wants to go low, but rules be rules, man. So I'm going to go in and cut with a $20 loss, and I'll post that in the Discord. Oh, $37. Negative are these nuts.
Negative.
All right, and for me, I just wait for the 945, especially since this 15-minute candle is indecisive. I'll just wait for the 10 o'clock to show its hand before I engage in the market anymore.
Yeah, that little wick. I stopped myself out as well at 941.
If we take out this high that made this thing a long false, right, that'll lead to more of a range 1 day, right? Saying that, like, hey, we can't get above 10 basis points, we can't get below 10 basis points off the 930 open, right? We're just breaking a structure left and right. There's no consistent trend, right? And that usually leads to 4 more hours swiping and making out with this 930 box. Now that can change in a 15-minute candle, and if it does, it does. So this is probably going to be a very boring stream today. No exciting 300 handle trades today.
Base hits, baby.
That's all you need.
Really is the most underutilized thing in trading, is just base hits. You can make a ton of money just taking little nibbles.
And you cannot, like, jeopardize your hard work of taking base hits for months on end, and then, you know, trying to swing for the fences, like, ruin it all. I think position sizing and base hits are the most underutilized. You can always tell a person who's traded a live account based off how they position size.
Oh yeah. Yeah, I mean, like I was saying earlier, I risk 0.5% of my account per trade. So, I mean, it would take me 200 losses in a row to blow my personal account. It's never going to happen.
I think that
people look at you year over year and they're like, dude, such a scammer. This is a Nancy Pelosi scheme. And you're like, no, it's not, dude. It's just proper position size and base hits.
Yeah, I mean, I'm not collecting like 10 grand per trade either. You know, I'm only collecting I risk 0.5%, and I'll collect, you know, anywhere from 0.5 to 1.5, sometimes 2% per trade. If it's usually my trades are kind of around the 2 to 3R range. Occasionally a 1R if I'm feeling stingy, but usually they're around 2 to 3R. I mean, get 1 or 2 of those a week. It's really all you need to double your account every year.
Mm-hmm.
But for some reason, people can't accept that as enough.
They can't accept doubling an account. Yeah.
Yeah.
Yeah. Made 100%. That's not good enough.
I think it's just the prop industry skewed expectations. So it wasn't always
think
like that in the futures space. I've been in the futures space for around a decade. The gamification of it hasn't really started until like the last 5-ish years, kind of when the prop wars started. And don't nobody take this offensively, but it's brought in a different crowd of people that typically didn't have access to these markets. The younger crowd. Not that applies to everybody listening. If you're cool, then you're cool, right? But it's brought in a lot of people that didn't have the Win Lambo crowd, as somebody posted in the chats. It's brought in the Win Lambo crowd. Because now where traditionally you had to have thousands of dollars to trade futures, now you can trade futures for $30 for an eval cost. So it's just brought in an entirely different group of people to this market.
Yeah, but like even Austin shows it because he trades primarily prop, right? For intraday.
Yeah.
Right. He's done everything, man. Like he's shown, hey, this is the same account. And he's shown that same account for like months and months and months and months and months and months. Just as transparent as you can be. He's trying to prove that proper position size and base hits win. You do it, right? I've done it. It doesn't even matter, right? Like nobody cares until they care, right? And that's the thing. Like it honestly has nothing to do necessarily with the prop or the live. It has to do with the individual and the influence that they allow to corrupt their brain, right? These people just can't even use common sense. Like they brief somebody who knows nothing about the markets, right? And they brief them their plans of like, hey man, I'm gonna risk 50% of my paycheck, right? On one weekend. Like they just, I mean, I don't know how to address it anymore. So that's why I just like
you got to understand what the real problem is, right? We talked about this a little bit with Chris last week. Is while props do give a bad taste in a lot of people's mouth, and for good reason. There's a lot of reasons too. We have to also understand what is the actual root cause, right? A prop account isn't the reason for your degenerate behavior. It's the same reason. It's the same analogy of like when I go grocery shopping. I used the same thing last week. When I go grocery shopping, I see a lottery machine that you can put a card into and go get
buy scratch offs with your debit card.
With your freaking debit card. Now, is the lottery machine taking your money? Is the lottery machine no, your degenerate behavior of, okay, well, I'm struggling to pay for groceries, but I'm going to go and swipe $10 every time I go grocery shopping for a chance to be a millionaire. The pattern, the behavior, the habit, that is what's causing you, because that compounds. Every time you do that and every time you enforce that behavior and reinforce that behavior, that's what compounds into degenerate behavior, right? It's not the prop. It's not the eval that's causing you to click reset 700 times. You can do the same thing in a cash account. Your quote unquote reset is next time you get paid and you save up another 5K, you deposit it into a cash account and then you blow that. And then you wait another month or two and there you reset yourself again, but with real cash. And that's where I think if you are a disciplined trader, if you have clear and defined edge that you can tell yourself and show yourself the objective statistics, and that's why I love statistics so much. It doesn't matter if it's a freaking prop account, doesn't matter if it's a paper account, doesn't matter if it's a challenge or whatever. The markets are always going to still print the same. Yeah, Project X, like you guys see on my screen right now, Project X gets a pretty bad rep for good reason, but these candles are roughly going to move about the same. It doesn't matter what the market doesn't care what platform you click buy or sell on. It's still either going to take your money or invest into your edge. That's it.
Somebody asked if I took a trade, and then can I type in the chat or no?
Yeah, you can type in the chat.
I have this restream thing up. How do I type in the chat? I don't see any chat box.
You'll want to have another like live version of it going, and you type there for yourself under your YouTube.
So I need to pull up his actual YouTube.
Yeah,
you can't chat on your end.
He can, but it'll come up as restream. That's all. So it might come up as it won't come up as him saying
weird. It. Okay, real quick, it's 9:52. So now by this point, I'm going to give myself one more shot. If we break to the downside here because we're failing to get to the upside for this market open, and then vice versa if we get above, I'm going to give myself, and look, I even share my screen here. All right, you guys can see my actual execution chart. I hate doing it like this because I have to split, but I want you guys to see realistic trading winning or losing. You guys here, this is my stop loss right here. Look, went short, got stopped. So if we break to the downside, I'm going to be looking for cash flow targets by this point because we're making out with 930 towards potentially this P12 mid retracement to midnight open retracement area, depending on where we close. If we break to the upside, depending on where we're at within the time of day. So like, I mean, we could chop around market open for 7 hours, who knows? But if by 10 o'clock, so I'm going to draw out the 10 o'clock quarters here. If we get above market open, that's signal number one of a potential continuation. And then signal number two is getting above the 05 box of the 10 o'clock hour and then taking the 9 o'clock high. So either I'm looking for cash flow shorts to the downside for the potential retracement of these statistics here because we're still failing to make any sort of direction, or we get to the upside above market open where I'll start scaling into a long and then let 10 o'clock hourly candle tell me what my profit expectations are off the 05 box. And that's what I see. Was that a break even? No. There you go. You can see it. I went short at 808, got stopped out at 844.
Yeah, I'm not worried about like I'll wait for 10 o'clock at this point.
Yeah.
Because like, yeah, obviously 3-hour structure probability is going down and to the right, but like right now, the market's not showing its hand, right? Like, so this is just my time to sit here and just be patient. Maybe 10 o'clock makes me wait all at 10 o'clock. And like at this point, like we haven't made the obvious yet. So like right now for me to take a trade, it's just purely based off of stats, right? And I don't like doing that. I like having a live price component to kind of give me the clues, but definitely leaning more towards what Austin said as well.
For me, it's price is hanging out at the 4-hour open right now. It's hanging out at the 1-hour open right now. It hasn't really done anything since 9:30 open, right? It's set a little high, it's set a little low, and we're just chopping inside. So it's nothing that I'm looking to touch. And the ALN session stats is already closed out. So my next stat window is IB. So I'll be looking for potentially a trade somewhere in the 10:15 to like 10:25-ish piece of time. And if there's nothing that looks good there, I'll just wait for IB to close. If IB is going to close out and be kind of mid-range, then it gives me potential to take it to the higher low, depending on what the stats say the bias should be. But it's just patience at this point. Nothing. Haven't taken any trades. Not interested in any right this second. We'll see if as the time gets moving, what forms. But it's only Monday. There's no reason to rush a shitty trade on a Monday.
Exactly.
Especially a no news Monday.
100%.
Market will be there tomorrow.
I'm short 15 minis now, guys. I'm just kidding.
This is what trips up a lot of people because they get bored or they get impatient and they start to
they want to force their wheel.
Take trades that don't meet their system or take trades out of boredom or get chopped up just trying to go for the highs or lows.
Well, here's another important thing too, right, Chris? Is it's also okay that you are executing your edge and it was a red day, because that's something that leads to people overfitting their edge because they'll be like, but I seen the setup, but I took a loss. What's there to learn from? Sometimes there's nothing to learn from just a business expense. You don't have to learn from every single trade that you take that is just a valid, expense trade. That it just welcome to trading. That is a normal thing.
Oh yeah, definitely. And if your setup is, I'm a fan of taking every setup that happens in your window of time. I don't subscribe to the limiting myself to some made up number of profit or trades. Over the word over trading, I think, is just a buzzword. It's a myth. You guys can have your own opinions on that, Mick and Austin. My opinion on it is there's no such thing as over trading. You can take every trade that falls within your window of time if it meets your criteria, and all you're doing
Exactly.
is just doing what you're supposed to do.
Now, a lot of people don't understand the difference between like, and this is another thing that these props do is like they don't understand the risk of ruin of
Yeah.
that account. So they start all these new accounts at the same time or whatever, right? And they don't realize that the risk of ruin resets after you go from test phase to, you know, profit phase. And then from profit phase, like then you have to, every time you get a payout, you're resetting that risk of ruin. So I definitely, knowing what your account is. So for like you and like people who live trade, like absolutely. Like if the if then statement is there, right? I grade all
Yep.
I have trade models all throughout the day. And if the if then statement's there and like we're in the market environment for that trade, I will take that trade 100% of the time. But I'm also aware of where I am in that 14-day risk of ruin for these props, or the not so much for the live. My live, I'm like you, I don't really give a fuck. Like I'm at the point where like it would take a lot for me to blow that account, and that's not going to happen because I'm disciplined with my position size, right? But absolutely, like if the if then statement's there, the market environment's there, like the expected value's there, then you take that thing and you run with it and you take the trade and you let the law of large numbers protect you because your risk, your position size and your risk profile for that should have already been defined for you not to fall on your face because you took a loss.
Yeah. Yeah. I mean, if you're trading on a prop, you obviously have rules you need to follow, right? They might have max loss in a day or max contracts or, whatever. They have their own rules. I trade a personal account, so I'm not restricted by those rules. And so I don't believe in just capping myself at some like made up number. So I'll take every trade that happens within my time window of trading. Because siloing yourself in a container of performance like today's performance or this week's performance, those are just made up performance buckets that you made up, right? The market doesn't care that you made 4 trades today and that tomorrow is a new day. The market's just looking at all your trades is how many trades total. You could take 100 trades, and 100 trades is 100 trades. It doesn't matter if you made them all in 1 day, 1 week, 1 year. The market doesn't care.
Well, edge is what dictates frequency, right? Like edge is what dictates everything. You know however you trade and use that tool, that's what's going to dictate where you place your stop, where you place your TP, how many trades, how many attempts. So when we give, these arbitrary numbers of frequency, like, oh, you took 10 trades today. Wow, you overtraded. But like, okay, what if those 10 trades were just a part of your plan? That's not overtrading. It's a very subjective term. It's just truly frequency, win rate, all this stuff is just a pure side effect of execution. It shouldn't be looked at, in my opinion. It shouldn't be looked at as gospel because it's just a side effect of action. It's like, I hate when I hear people say, I've already taken 2 trades today. That's my rule. But okay, but if your edge, and this is why statistic-based trading, in my opinion,
take that third trade. It could be a winner.
Like if you ran the stats on your trading and the terms of your or the like if you quantify your edge and know the statistics and know what numbers, like this is how many attempts give this probability, just take the trade. But then this goes down the other rabbit hole of most people don't do that. Most people don't know their numbers. They don't know their edge, which is why we try to scream from the mountaintops to some way, shape, or form quantify your edge. Because if you don't know that the liquidity high or the order block or whatever thing that you're trying to look for, maybe it has
let me share a screen real quick.
Well, hold on. I'm about to
real quick.
Give me 1 second here. We're breaking above market open now. All right, we took the high, 10 o'clock took the 9 o'clock high. So now we have an out of statistic high here at 10:01. So if we close above this market open here, I'm going to give this one more chance off this market open and potentially a bullish 10 o'clock hour. We got 5 seconds left. All right, I'm taking this long. Stop is going to be the other side of market open. I'm going to take this for a potential. Now that the 10 o'clock took the 9 o'clock high and we broke above market open to the downside failed to provide a 0.1%. So now I'm taking a cash flow position of the upside movement of this market open. I'm going to trade a 0.14% just arbitrarily here. I'm going to place it at 896.25. 896.25. Now here's what I want you guys to understand. This is what I was talking about with negative R. You guys see my stop loss right here? My stop loss is a lot bigger than my target. If we get an initial push and this complete objective positive price movement right here off market open, if this provides 0.1 to 0.3%, okay, this doesn't matter the day of the week, doesn't matter the statistics, doesn't matter anything. This objective positive price movement off market open is a lot higher that it's going to get hit around this 0.1 to 0.2% than it doesn't. And so then my goal as a statistical based trader is where can I define my expectation of price in an objective way? And how can I do that every single day with a positive risk management? Does that mean that today's going to be green? Absolutely not. It means that over the course of 100 trades, if every single trade that I take, I'm structuring myself to high probabilities, I can have permission to trade with a negative risk to reward. I hate that word because it's not negative, but the stop loss is bigger than the target because over the course of 100 trades, I'm trading something that hits 70 to 80% of the time. And so I just have to structure myself to make sure that I can protect my downside, right? If market open was 0.4%, absolutely. I'm not going to place my stop that's going to destroy my account. But I'm also going to trade because there is positive edge here. There's positive expectancy that at a minimum I can get 0.1 to 0.3%. And so then now I'm just structuring this with the current day. If we took this high and then now going into this first 5 minutes of this 10 o'clock hour, okay, so we got one more minute here. If we get above market or this 05 box, the first 5 minutes of this 10 o'clock hour, I can now adapt my target. I can take this target and adapt it to the day. I adapt it to this candle. If we get above the 05 with the context that we took the 9 a.m. high and we're above market open, I can push my target up a bit more into this area because this 10 o'clock hour this live price is aligning with the statistics of fulfilling this price distribution. And exactly what Chris said this morning and Mickey said this morning, we still got a lot of budget left on the day. And so if I know that we have a lot of budget left on the day and we're accepting above market open, we're accepting above the and potentially making a bullish 10 o'clock hourly candle, I'm going to take that trade. I don't care if the stop loss in this singular trade is bigger than the TP because the expectancy over the course of 100 trades is still positive. All right, Mickey.
Yeah. So this is why it's like really important, right? So these are 4 different systems that fire completely independent of each other, right? One's a trend, one's a reversal, one's a cash flow, one's a range, right? And so you'll see that every system, right, and position size allows this, right, goes through win, loss, win, loss, win, loss, win, loss, 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 win, loss, win, loss, 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 7 consecutive losses, whatever this one is, the consecutive losses on this, 6, 5, that's a glitch. I had a -1. All right, so, and then 6, right? So I know that these 4 systems are supposed to have specific if-then statements in market environments that they should be firing on, right? Here's another example, right? This is market open breaks versus gunship trades by market open. And this is a little bit more clearer. Let's say, right, we use our silly little rules of I can only trade this much or this much, and then I have to turn my systems off, right? You see that this system went through about a month of win, loss, win, loss, win, loss, win, loss, loss, win, loss, win, loss. And we survived that month under this system because we used proper position size in, right? While this system was pulling the weight, right? Imagine saying, right, look, I took my three trades on NQ, YM, ES, so I'm going to turn gold and copper off, right? While this one's covering the down on the weight, right? While this system's going through just this normal, you know, like win-loss consecutive drawdown mode, right? Then they would not be able to hedge each other at all, right? Now, when this one goes into a drawdown, and this is all last quarter trades taken by these 2 systems, when this one went through drawdown, imagine me turning systems off because I've hit this make-believe, you know, rule set just based off of my feelings, right? Then this one wouldn't be able to pull the weight and the whole P&L off of this, right? So what Chris is saying is like, no, like there's no such thing. He doesn't believe in like turning systems off. If the if-then statement is there, put the systems on and let them do what they're designed to do. If you have multiple trade models, right? There's a reason you have multiple trade models, because like right here's a prime example of how the advantage of multiple trade models, when one's going through its normal consecutive losses or its drawdown or whatever you want to call it, right? Like as long as you're position sizing these trades correctly, you're not going to blow the account, right? While this system is pulling it up and forward away from that risk of ruin phase, that risk of ruin, right? And then when this one goes in this consecutive losses and this drawdown, right? This one is pulling this farther away from that zero line, which is the risk of ruin, right? So hopefully that opens your eyes to what he was saying, like, but absolutely good conversation this morning.
Yeah, it's just you could have a 70% win rate, right? I mean, pick a random number, 70% win rate. So you're going to win 70 out of 100. You're going to lose 30 out of 100. But you don't know what the next trade is going to be. It could be one of those 70s. It could be one of those 30s. So just take the trade, right? And if it's a win, it's a win. If it's a loss, it's a loss. But you've already accounted for if it's going to be a win or a loss by knowing your numbers and managing the risk and properly, putting the right size on. So it doesn't matter if it's a win or a loss. Just take the trade, right? Don't avoid the trade just because you've taken 2 trades today,
or just because like you have a 300% gap below you, or a 300 handle gap below you. Like it's stupid.
Well, we gotta ask ourselves, why do we do that, right? Why do people be like, say like, no, I'm not gonna take. Let's all be honest. Let's address the elephant in the room. Most of the reason why people do that is because they don't want to lose. They don't want to take a losing trade. Because if you were able to filter, right? I hate the word filter when it comes to trading, by the way. If you were to if you're operating off the assumption that you can filter a trade, that means you can filter losing trades, which means you can win 100% of your trades. But you're even going to lose the trades that you think you're going to filter. There's still going to be trades that you're going to lose that you think you can filter out and just not take. But then on the flip side of that, you're also going to have trades that go smack to your TP when you thought you could filter the trade, and protect your downside. So just take the dang trade if it has positive expectancy.
Yep.
It's okay if you have a losing day. Oh, I got a phone
call. We've got a couple characteristics that I track that lead to the market environment. Doesn't mean that this market environment will attest today, right? But like when we take out the high that made it long false or long true or whatever, right? Like which we have done already, right? That leads to more range 1 days than not, right? When we sit there and swipe a level over and over again, like we're doing with the 930. So 930, if this was going to be directional for the morning, we would have left it by 930 to 945. So now for those people that do the different daily classifications, is telling you like these are the characteristics that you're beginning to see that lead to that range 1 day, right? And so that's what I'm seeing right now. I'm in no rush to take a trade, even if I take a trade at 12, right? Like, because right now we're just letting the market define the range. If this is going to be a range 1 day, when I start turning on range-based trades later in the day, like I want that range to be able to say, hey, this is the range, right? And since we know that the low of the day is supported to be in, right? I'm not going to sit here and try to sell a market that wants to go higher, right? I'll wait for extreme moves below the 930 and then bid it up for cash flow targets.
All right. So as it pertains to IB, we've got about, 18 minutes left before IB closes.
Yep.
So I'm starting to form the expectation that it's going to close in the upper half. If we look at where the low is, that 936 low and that 1006 high, the low was set first, the high was set last. Where the midpoint is between the high and the low, we're in the upper half. So I can start to kind of form a bias of, I'm going to think we're going to close in the upper half. And does current live price agree with that? So now this recent pullback we just got was it tapped into that 40 to 60% pullback range. We're coming out of that pullback. So now it's a matter of looking to see if there's criteria, entry criteria and entry trigger. Criteria is the conditions that need to be present, and trigger is the event that happens that makes me pull the trigger to hit long. So now it's waiting for that. And then I now have an expectancy target of the IB high. So you don't necessarily have to wait for IB to close if you can use current price and logic to make a educated guess of where you think IB is going to close. You don't have to wait for it to close. Sometimes it's obvious, sometimes it's not. So
Yeah, we'll say this is definitely a little bit more of a challenging Monday than as far as getting outside of market open. And these are also my weaknesses that we talk about, a ton, understanding your weaknesses, because that's another cool thing that using statistics does, is it can also tell you, hey man, this is not the environment you can operate in. And so my biggest weakness for me as a trader, if you guys want to drop them in the chat, this is actually a pretty cool little social experiment. If you guys want to, if you're sitting here just watching candles bounce, doing whatever, drop in the chat, what are your weaknesses? What is a day? What happens in a day that is not conducive to your edge? And for me, mine is when we struggle to get outside of market open, especially by 10 to 10:15, like you see us doing right now. And we're trying to see if we're going to get that pop. And then I do agree with Chris. By this point, I guess if I had to choose what the probability is, I think it is a higher probability of taking the high than the low, because we took the 9 o'clock high. We're staying above market open. We just need to see follow through with that 10 o'clock hour. If we start to take the 10 o'clock Q1 low, so we take the 15-minute low that we made, then I'm going to say I'm most likely off sides, and I'm going to let my stop loss do the worrying at that point. And if I get stopped out of this long, done for the day for me. Met my budget for the day. All right, what do you guys got here? Matrix Brain says summer markets. Dave says pizza. Okay, that's I don't have the statistics on that.
Dude, pizza's my weakness too, bro.
Candlestick Stalker says bullish D. I know why, because Candlestick, you like to short. Candlestick Stalker not only likes to short, but DMPDWTP days on a bullish day. Yeah, that destroys all shorts. Not retracing to midnight, ATR. Yeah. Well, not retracing to midnight, that's where it's really key to allow live price to tell us when or when not we're most likely going to get that retracement, right? So for instance, today, if we can't even get back below market open, then, midnight's below market open, then I don't have that expectation. But if we stay above market open, I can look at the opposite side of that statistic and then, okay, well, what statistics are to the upside that gives me that expectation? I know that we have a positive price movement off market open from 0.1 to 0.3. I know that Q1 typically makes the higher low more often than not. I know that if we trade an in-stat high of day for an out-of-stat high of day, then I get to use the process of elimination to see what the next checkpoint of price is. And all of this to be said, you can still lose. Taking the high and the low of the range when there is no clear direction, that's a big one. Over leverage, dude, that's the biggest one right there, right? Guys, I think this whole conversation we've had today has just been about risk management. If you haven't noticed, the common trend is just, can I position properly with my expectation of price? And if I can't, can I survive to trade tomorrow if I'm wrong? And Dave has a 100% fail rate with pizza. Okay.
Oh, man. All right, so we're about to break out of the Q1 low. Let's see if we can knock it out, which would give us a Q1 instat high. Like I said, like you'll see these quarters break a lot more when you're in a range 1. There you go. You got an instat high. Range 1 day.
Yeah, we just took the 05 box low. If we get it close here, I can close this trade early to reduce some of the expense. But if we suck back into it, I'll hold.
10 basis points off of that 05 box break would be the low of 930.
All right, I'm closing this trade, keeping it cheap. So you guys got, here's the other thing, all the furus that tell you they're so great at bottom ticking and topping tick stuff, but they'll never show that there's one very strange thing. They'll never show you all of their executions. They'll only show you the one that bottom ticked or top ticked. It's so weird. Here's a losing day for me.
I gotta jump. I got a meeting with the veteran to build him a resume.
No worries, man. I'm gonna stay on here just a little bit longer.
Hey, Chris, honestly, like you're definitely one of the, I'm not just saying it to blow smoke up your ass. You're one of the best traders I've ever met, and you're a hell of a vet and a hell of a friend and a hell of a dude, man. I appreciate you coming on here and, sponsoring responsible growth and realistic expectations across the trading space. Keep doing you, man.
I appreciate the words.
Yeah, appreciate you hopping on, man. See you later, Mickey. Oh, you took that short pack? Nice. Nice. Yeah, I'm being patient here because now we've gotten below the 05. And so this first 5 minutes highs and lows kind of gives us, okay, are we going to make that significant high or that significant low for the rest of the hour? That's why I cut this trade, because now live price is telling me I'm potentially on the wrong side of the market. Okay, because as statistics tell us, there are probabilities here. Live price is disagreeing with me. And so when live price disagrees, I get to pay way less for a trade instead of staying in it. And so this is the other example I wanted to show you guys and actually show my executions instead of just my trading view, is I want you guys to see, when it comes to negative, okay, the stop loss bigger than your TP style trading, it doesn't necessarily mean that your stop loss has to always be hit, right? If live price is disagreeing with what you are doing in the trade that you're wanting to take on, you can pay way cheaper for that trade. And so then if you also look at that from a temperature gauge, right? Or even look at this from a risk to reward standpoint, right? The moment I went long here, we only risked 0.08, 0.09% for the potentiality of that 0.17. So then looking back at the trade, this was actually a very positive in terms of the risk that I've now realized to the potential reward. This was a very positive structure trade. And so that's why I can trade, and why a lot of people in the group, we can trade with stop losses bigger than TPs and still maintain a positive profit factor. It's because all we're doing is managing that trade and managing our trades to align with the highest probable outcome. And if the highest probable outcome is saying, hey, man, you're wrong, you can use that as also a way to invalidate yourself.
All right, so IB still hasn't closed yet. So as that expectancy of maybe it's going to close in the upper half, starting to lose that expectancy as price starts to move down. So we still got 9 minutes left. So where it closes at 10:30 is going to pretty much dictate what side of the IB should be the target. Now, they could conflict. So you have the IB low that was set around like 934, 935, that low there. And then you have the high up at the high so far. So the low is set before the high. That's fact currently. Between those highs and lows is going to be your midpoint. So where is IB going to close? If we can close in the upper half, then it favors a high break because you have the low before the high set. You have above midpoint closure. So it's going to favor a high, and that would be the target. But as you start to come down, we're in that 40 to 60% retrace for a trend continuation. So where the trend continuation falls apart is if we break the low that you're measuring from that trend continuation pullback. So that low being the 25,808, that 952 low. If price breaks that low, then you've broken that leg of movement and the trend is changing. So no more are you expecting pullback for continuation up. You're now expecting trend change and you're looking for pullback up for continuation down. But it has to align with the IB stats too. So historical stats, they're giving you expectancy. The live price is telling you, should you believe that that expectancy is going to play out today?
Yeah, and it looks like we're like right in the middle, right? And of your
we're
IB.
pretty much right around the middle.
Let's see. Yeah. Because now it should, dude, it was looking bullish. Now we're melting. We could close below the mid.
Yep. So it's just a matter of waiting for entry criteria. If you can have an expectation, you can take the trades early if your criteria and triggers there. Or if it's not there, just wait for it to be there, right? You're just trading here. You're not trying to take trades that don't meet the criteria, that don't meet the trigger, that don't meet the expectation. Just be patient and take the ones that make sense. If you get no trade today, well, there's 4 more days this week you can trade. And really you only need 1 or 2 good ones, and that makes you pretty good for the week.
Yeah, that's all it is.
I think most people here would be pretty okay with pulling in an extra 500 a month, 1,000 a month, 2,000 a month, whatever the number may be. It's not like you're needing to make 30K a month. That's the I got to buy a Lambo and $1 million house type of people. But I think most people just want to pay their bills and go on nice vacations. And you can definitely do that with being patient and just taking little nibbles.
Being able to just to literally make that, like, yeah, like that extra money to give yourself some breathing room. I think that's the thing a lot of people lose because they are looking for that. Like they're missing the forest through the trees, but like, bro, how much more at ease would you feel and how much more peace would you have if now you don't have to worry about that car payment every month or the cell phone bill or, maybe cover half of the rent or electric bill or whatever, it's like, dude, that's, in my opinion, that's the first step of freedom. But
Oh, yeah.
A lot of people want to fast forward to the level 3 without passing level 1.
Yep. It's all a matter if you can consistently make $50 a day or $25 a day or whatever the number is, it doesn't matter. Or just a week, right? If you have a positive average per week, like you on average you make $200 a week. That if you can do that consistently over a long period of time, then that $200 amount is irrelevant because that's just a matter of scale and compounding. That 200 average will increase to 300 and 500 and 1,000 over time. Or you can add more capital or add more accounts if you're prop trading or whatever. The dollar amount is meaningless. It's just your ability to consistently collect R's. The value of the R is 100% related to how much capital you put into the account. But if you can consistently collect R's, then you're uncapped profit essentially. You can make as much as you can make based off of the capital you have. Yeah, no Discord for me, the ATR Wolf. Back in like 2013, 2014, I ran a Discord with some people, trading community. It's not my jam.
We're his placeholder.
I prefer to just be a dude that trades solo and occasionally pops in to troll Austin.
To make fun of me, yeah.
I've mentored a few people behind the scenes. It's not really something I offer publicly, but sometimes I'll take someone from the DMs, and give them some time. But other than that, I don't really do any big group things or services. I don't sell anything.
I will say the only other trade I'm looking for, guys, now that I'm out of that, is we are respecting the Q1 high of the 10 o'clock hour. So there's my if then statement. So if we're respecting this 05 box and respecting this 10 o'clock hourly high, then if we get back here to the downside below market open, I will try one more time. But this is only if we respect this high. If we come back up to the upside, taking Q1 high, this is potentially a doji hourly candle because we took the low, and then we come back to take the high. My edge is off, and yeah, done for the day after that. But there is still a potentiality of a high and then a low in Q3 to Q4. And so then if this is a high in Q1, a low in Q3 to Q4, then what's the warpath? The warpath is all these statistics to the downside. But if we can't even get below market open, then live price is not accepting to the downside, which means this is not going to have a low in Q3 to Q4. And then the close back above market open is my signal that this is not the day for me to look for anything else. Keep the business expenses low. So that way tomorrow, when the day that, or the next day, or whenever my edge presents again, I can hit it and survive to trade another day.
Man, is this going to blow through the high in one candle? 'Cause that's really going to mess up any any way to get in.
No.
So was hoping it would just kind of work its way up, not blow through the top in one candle. That might end up being like right idea, just no setup.
Yeah. Because now look at this. So here's another thing I like to do. So you see how we broke out of market open. Well, you've heard me talk about this, Chris, the mean reversion of stats. So we closed here, failed to deliver 0.1%. We closed here, failed to deliver 0.1%. So now this is the third close in the day. This 0.1% is around an 85 to 80% hit rate, obviously depending on the sample size. And so you've now seen 2 times an 80% fail to deliver. And so now this close right here is even higher of a potential mean reversion of that strike. And so 0.1 and then again the 0.3 all the way up here. But exactly to what you said, sometimes we just got to sit here and watch the market say, okay, this was the move you were looking for. We just you just can't get in it.
Yeah.
You're not allowed.
Yeah, this might give a good pullback. If it doesn't give a pullback down into that most recent up leg, I'll be looking for somewhere in the 40 to 60% range of that most recent up leg to get along. If it doesn't give it, it doesn't give it. But this looks good for a high break. It's just a matter of, can I find an entry? Not sure it's going to give an entry that I want, but it does look good for a high break. At this point, it's 10:30. We've set the low first, set the high last, closing the upper half. Expectation is IB high break. IB high being at 25,876. So expecting that to break. That's my profit target. It's just a matter of, can I find an entry that has good R, right? I mean, I'm not going to buy the top right here and just, try to take 5 points, 10 points. It's not worth the trade because I'd have to use a logical risk, which would be putting me probably risking 2 or 3 to make 1, and that's just not an optimal trade for me. So if we can get a pullback, I'll take a long, but if we can't, then this idea might just not be there for a viable trade, even though the probabilities and everything are favoring that high break. I would love to get a pullback though.
And we had a lot of distribution too. That's another thing that's kind of like a little bit of a shocker for me today. Looking back on how we kind of moved this morning, is typically when we have these like rangy moves around market open, I don't really have a stat on this, but this is just my experience of doing this for so long now. I've noticed more rangy around market open when we're inside the overnight range, not above it, So it's kind of like throwing me off a tad bit, which is even furthermore just, hey, this is not my time it's my day to stay flat.
All right, here we go, getting some pullback. Let's go. Give it. Need a little bit more than that. You need to get into the 852 to 842 range. That 10-point window puts me in the 40 to 60%. So I get down into there, start to look at long criteria. Not enough of a pullback yet.
Well, Chris, do you have any? We're going to about wrap it up here. And then for the pack trade group, we have Ambiguous Hour next, led by PTFX and Cody. You have anything else you want to end everybody off with?
I would just say, man, my biggest I've been trading since. I mean, people ask you like when you started trading. I just assume they mean when was the first trade you ever took. So for me was 2007. I've learned a lot of lessons. I've traded every product you can trade since then. Every market. I've settled on futures. I've been consistent with futures for many years. My one piece of advice would just be to find one thing that makes sense and create a strategy around it. Focus on base hits. Just collect little nibbles. You don't need to, make 500 points a day. Just look for those little nibbles of profit and just do that day in and day out. You're not going to be making thousands of dollars a day, right? Unless you're trading huge size. But with base hit mentality, you're not going to be making thousands of dollars a day. That's just not going to be the outcome. But what you'll see is profits just stacking up week over week, month over month, to the point where you're making a lot of money, using very minimal risk and very minimal effort in terms of how much time you're giving the market. Like I don't want to be in front of the charts for 8 hours. So
Absolutely,
the way I trade is there's these little buckets of time, the ALN sessions, the IB, the noon curve. And I know I just have to be back at my screen right around these certain times and look for trades. I don't have to sit in front of the market all day. So for me, it's how much time do I want to give the market and how much money am I trying to get from the market? I just want to live comfortably and pay my bills and retire and go on cool vacations. I'm not trying to buy, like a mansion and a private jet. I don't care about all that. I just want to live my life.
Well, dude, like, isn't that like the fucking most, like, that gives you, for me anyways, it gives me goosebumps to know that, like, how much pressure do you think the normal retail trader puts on themselves because of all this Lambo, lifestyle, this perfect style trading that a lot of people try to project? How much pressure do you think every day is now on the chart to like perform at this, like, above average standard, when how much more peace do you have just giving yourself permission to say, dude, I'm okay. I'm okay being an average profitable trader, because I know that even an average profitable trader is above average the normal trader, because most are not profitable. Like how much more peace do you have being able to consistently execute your edge versus the other style,
Right. Yeah. I mean, I'm just moderate expectations, right? It just boils down to having moderate expectations of what you're trying to pull from the market. If you look at any big market player, I'm not talking about in the prop, the Finex gamified trading space. I'm not talking about this space. I'm talking about look at older people, right? The Soros and the multimillionaires and the hedge fund managers and the people that have been in the market for longer than you've been alive. Watch some interviews of them and podcasts of them. They all say the same thing: smart risk management, being content with moderate expectations, proper position. They all say the same exact thing. None of them is saying something way different. And I mean, for me, we went on a baller vacation last year. The market paid for all of it. And I'm not, out here trying to collect grand slams every day, just little base hits. If I can collect little base hits, give me 2 to 4 R, 5 R a week on average. I'm more than doubling my account every year. It might not seem like a lot to turn. Let's say you start with $1,000 and you're able to turn that into 2,000 or 3,000 by the end of the year. It might not seem like a lot, but it is a lot because it's capability. It's showing you that you can do that, and so then it just becomes a matter of getting more capital. There's a lot of ways you can get more capital into your account, right? You can trade with props to gain more capital. You can leverage into other products. You can make some different investments, pull that money in. You can start adding money from your paychecks into your account to make it bigger, right? There's a lot of ways you can get additional capital into your account. But just being able to double your account in 1 year is huge, because if you can do it with 1,000, you can do it with 10, 20, 50, 100. The number doesn't matter. Eventually you're going to hit strategy slippage, to where you're just taking too much size for your strategy, but that's not going to happen until you're in the 6-figure, 7-figure size of a trade.
Yeah.
You won't have to worry about that for a very long time. And prop firms, you'll never have to worry about that, because it's sim. You're not even putting
And if you
real
think about the
contracts on the
ratio,
book.
like, you may not ever even have to worry about it, right? Like, if you're okay with, let's say, back to the analogy of just being good enough, let's say that you're happy with a few extra $1,000 a month that you want to scale up to that point. Obviously, we're not giving ourselves profit goals. You never want to trade that way. But on a profitable month, if, let's say, how much capital would it take in a cash account just to pull a few $1,000? It's not that much. You don't even have to go anywhere near a 6-figure account. And so you may be one of those people that you scale the account, pay yourself, scale the account, pay yourself, and you just, that account, because I've seen people do this too. They just have a trading account where they're not trying to scale it to millions of dollars. They're just slowly taking those trades to pay themselves, and they're just, rinsing and repeating. And let's say you go in through a drawdown, well, you just keep trading the same account. Like, they're not using it as, let me build this to $1 million account where I even have to worry about that much of a slippage problem,
Right. Yeah, and like my trading, it pays for everything in our life. My wife and our family, it pays for our life. And what I do is, when I double the account, I pull everything out and I just reset it back to where I started.
Exactly. Yep. That's what I meant. Yep.
That's what I do, because I also have other forms of income. I have 2 small businesses that I manage as well. So I don't, and I don't get bent around like the market being my sole source of income, because I don't think the market should be your sole source of income, because then you're relying on, politicians to create good conditions, and et cetera, et cetera. I have no desire to trade full time as my only source of income. I want trading to be supplementary to other sources of income, multiple sources of income. That's just my goal. So having it that way, I can trade a little more relaxed. I don't have to, have pressure that today's trades means bills get paid or not. I can rely on other sources of income for that, to where trading is just supplementary. But yeah, just base hits, man. Base hits, and they compound very fast. You can turn a small amount of money into quite a large amount of money in no time, if you're just focusing on base hits. Since last August, I don't know why I track stuff in August, but I think it's just when I started my personal account, so I just always track stuff in August. But we're now into October, so it's been more than a year since last August. So the clock starts again. But I was able to more than double my account in 1 year on my personal account. And the cycle has now, changed back to August. But going from this current August until the end of the year, if everything's on track, I would have hit over 2x. So I tripled. Well, you would say double, because you brought 100 to 200. So I've tripled my account by the end of the year relative to last August. If everything stays on track, I will have doubled my account twice. If that makes sense. But
That's incredible, dude.
But I'm not doing anything crazy.
Just base hit.
0.5% risk, and just collecting a couple hour a week. Like, it's do the math on your own calculator. Just look up an exponential formula online, right? It's what does this percent make over the course of 365 days or 250 trading days. It just does not take much to double or triple an account in 1 year. It doesn't. You can do it with very low risk and good position sizing, and that assumes that you have a good strategy, that you have yourself under control. So the emotional control part of trading is the biggest part. Doesn't matter what kind of edge you have if you can't control yourself to trade it. Obviously, there's more to it than just having a good strategy, but there's more to it than just base hits. But assuming you have a good strategy and you have yourself controlled, low risk base hits, it will pay for everything you want in life. I promise. Like it does for me. So
Well, that's what makes those. We like to joke Ponzi scheme P&Ls, and I'm sure yours probably looks pretty similar, right? Is like if we use statistics, if you have like every target that you trade has a 70-80% accuracy, like with your ALN stats, right? Like there's around a, like let's just say a 70 to 80, let's just say 60, because obviously there's different. You got your different patterns, like pattern 1, pattern 2, pattern 3, but within those patterns, no matter what pattern you're in, you're trading something that the target itself has a baseline accuracy of around 60 to 80%, depending on the scenario. And so if every target that is feeding your expectation of price has that accuracy, you just have to let the losses happen, and then you kind of have like, here, look, I'll even show you guys. And this isn't flexing. This is exactly what we're all talking about. Look, this is what makes these P&L, these Ponzi scheme P&Ls. This is my funded accounts with Lucid. Like, do I take losses? Absolutely. You guys just see me take some losses today. But over time, these base hits add up. I mean,
yeah, man.
They add up. They're not sexy. Like some days, look, 8 trades. Some days I get stopped out a few times and then my edge is still presenting. Take the trade and maybe I end up break even or a little bit in profit. Some days it's a one and done day. Some days like today, I get a really good overnight or pre-market trades. Not that great in the market, right? Took 2 losses this morning. So now I'm 3 trades done, almost 600 up for the day. 117. Look right here. Exactly what you were saying. I took 1 trade last week on Wednesday and I made $117. I don't have a profit target. It's not like I had to make 200 today. No, is the setup there? How can I define my risk in a good way that still gives me positive risk management at the end of the day? And then just repeat the same thing. And then one thing that I do that I don't think you really, I don't know if you do, Chris, or if you haven't talked about it, is I like to cycle my risk. I like to diversify my risk. So like with Lucid, I have different funded account, and this is something that's stupid with Lucid. When you switch accounts, it doesn't like to update. There we go. So this is another portion of my portfolio with my funded accounts with Lucid. Is like you can see right here on this account, I took a loss 2 weeks ago, but I was able to offset this loss because I'm not trading and copy trading every trade across every single account. I think all you're doing is amplifying business expenses and wins. You're not there's no edge to just copying 10 different accounts or 20 accounts at the same time.
If you're copy trading 10 accounts as one account, then it's just one account.
It's just one account.
Yeah, you're just trading one account with dividing up the size into 10 separate orders. It's still just one account. All the losses are going to compound just as much as the gains compound.
Absolutely. And so there is a really cool thing that props give us too, but you can do this with a cash account. I can't emphasize that enough. With NinjaTrader, I think Chris, you can have 4 sub accounts.
I'm not sure. I only have 1.
Yeah. So I think you can have like up to 4 sub accounts, but that's with anything. I think I'm sure AMP, you can probably do something similar. I'm sure like all these brokers, you can have like Interactive Brokers. I know you can have sub accounts. I trade with Interactive Brokers on my cash stuff. So you can diversify risk in a way that not only are you risking just a portion of your account in a healthy way, but in my opinion, when it comes to managing risk, I like to look at it like safeguards. Okay. So like safeguard number 1, I have a base level accuracy of XYZ. Safeguard number 2 is I'm never exposing 100% of my portfolio in any given trade. Safeguard number 3 is, in addition to doing these 2 things here, I'm also only targeting low hanging fruit, high probable movement to the overall direction. And an example of that is, let's say it's midnight open. Let's say this yellow line is midnight open. I'm not trading if the market's down here. I'm not trading towards the overall move, towards that retracement. I'm trying to find a way to get in that only allows me to take a portion, aka the base hit, a portion of this overall intended direction that I can still manage my risk well and trade in a positive risk management way, that I can still get a portion of that 65 to 68% accuracy. So now if my direction, if my target every single day is going to have around a 65 to 68% accuracy over time, how accurate am I going to be trading with just a portion of that overall move? And so if I can, within my risk management, layer as many safeguards as possible, this in and of itself allows me to take losses. It allows me to trade without over filtering or over analyzing, and just do the same thing every day.
Yep. So IB closed, broke the upside. It just as we were talking through the stat, it all closed out. It broke the upside. So that 83% probability was realized today. It broke the IB high.
Oh yeah,
Broke the IB high before noon. And unfortunately, just did not give a pullback and entry criteria to allow me to get long. And could I have just chased it and bought the high as it starts pushing up out of that big 1 minute candle at 10:29 going into 10:30? I could have chased it. I could have longed, but it would have given me a risk reward that is not in line with my system. I don't want to risk 2 or 3 to make 1. I don't need to do that. So just be patient, wait for tomorrow or Wednesday and Thursday, Friday. Still have the rest of the week left. I can wait for a trade that will give me favorable risk reward to where I can risk 1 to make 2 or 3. I don't have to take this trade today that is risking 2 or 3 to make 1. It's just not, the risk is not, the risk reward is not there for me.
yeah. You only had like,
the idea was there, the bias was right, the trade, or the I guess the setup played out, but it did not allow me to get into the trade, and that's fine. I have one more hit today, one more chance. I also have hour stats on my website, which is a mean reversion strategy, but in an all-time high trending market, it does not favor that. That hour stats is mean reversion. It favors volatility, favors more internal price, more choppy price. When we're grinding in a trend like we are today, you don't want to try to be looking at mean reversion, at least not in my opinion. So I got one more hit today, noon curve, to see if we can get everything we need to take a long up to a new PM high. If that sets up, still got a lot of time left before noon, over an hour, but I would be looking for a setup to take long to a new PM high. And if it gives, it gives, and I'll take the trade and I'll make some money, or I'll lose some money. If it doesn't set up, well, I'll be back tomorrow.
One thing I'll say to the noon curve thing, because this is where, when Chris and I first met, and I was looking at his noon curve, it's very similar to a move that I like to capture on the gunship. It's called the lunch break. So it's not set up, so I'm just going to turn that off. But I like to always plug this little statistic here when anybody talks about that noon curve. Is, you see how, so this is the first quarter of the New York session, this gold box. And so when we have a clean move off this this Q1 on the New York, we tend to then, make a really good new high in the PM session. And what I mean by that is, if you were to, just like you guys seen us do with the 10 o'clock hourly candle, we like to split stuff into quarters. And so, if this is an hourly candle, and we're due for, let's say we make a low here, and then we take out the Q1 high and Q2 here, then now we're due for a new high in Q3 to Q4. That's just a really high statistic. Same thing fractally happens on, even the daily candle. So if in the New York session, if we split this daily candle in half from 6 a.m. to 1600, if we split this into 4 pieces, come on. Oh my Lord. There we go. Then the first quarter is from 6 to 8:30. Now, when we take this little dip like we did here, so we took the low, and so then statistically this high should have been left open more often than not. We didn't do that today. We took, or I'm sorry, other side of the coin. We took the high, then we took the low. So the fact that we took the high and then when we took the low, for me, the lunch break move would be off the table because we don't typically get that clean follow through for the trade that I like to look for. But then on the flip side of the coin, and you guys can go and back test this and run your own stats. When we respect the higher low of this Q1, the lunch break move, or when we take the AM sessions high or low for the PM session, it provides some pretty clean moves off that high. And so what that looks like is if we respect this high, if we respect this low when we took this high, we were due for this low to stay the low for the rest of the session. So for the rest of the day. And so then if this high, like let's say we leave this high open here for the rest of the day going into the noon session, the moment we take it, not a close, not a candle close, anything like that. The moment we come up and wick it, we deliver really clean price movement off of it. And again, we're in a range 1 style day, so I don't really have a lot of expansive move in the day.
Yeah, I mean, the important thing is patience. You don't need to chase anything. You don't need to FOMO into a trade just because you think you're going to miss it, or just wait for the criteria, wait for the optimal entry that you're looking for that meets your system's criteria. Like you know it's going to happen frequently. So trying to take a trade where it's not happening, it's not going to do you any favors. So if you don't take a trade in a particular trading day, that's fine. There's been some times where I haven't taken trades in days. I won't see anything I like on a Monday, a Tuesday, Wednesday. Maybe I take a trade on Thursday. So only one trading day that week, and that's fine. It's not, you don't have to trade every day, and you don't have to take trades that don't meet your criteria. Just try to be patient for the ones that check all the boxes.
Absolutely. All right, ladies and gentlemen. Well, I'm going to call it here. Chris, thank you so much for coming on. Dude, you're welcome anytime you want to pop on and do this and run it back. All right.
For sure, man. The thing I'll be looking for is just noon curve to play out. So looking for retracements to get long on if the 11th hour gives us something good. But other than that, this day has moved about 50% of its 60-day average, so there's still some more room it could move. But take into account today is a no news day, so where are you gonna get the volatility from? Your best moving days are going to be on news days because the market injects volatility into it, so you're gonna have more momentum. On days where there's no news and it's trending like it is right now, trending since overnight session, just going up to the right. Those are not the best days. They're typically going to be slow and grindy. It's just not favorable, at least not for me. So, if noon curve provides a long setup, I might take it. But other than that, I'm totally cool at this point, just chalking this day up as come back tomorrow and see if tomorrow's better.
Yeah, let's mean revert tomorrow on clean price.
Yeah, dude.
All right, guys. Hope y'all have a wonderful, wonderful rest of your day. As always, stay grinding on your goals and never, ever, ever. Oh, by the way, before we ended it, I didn't even say this one time. I am a terrible. If you guys want to see how we trade, you can scan this QR code up on the top left, and I'll even put it right there. Scan any of these QR codes. They'll put you on the wait list. We just started the boot camp for the next three months last week, so we don't even have availability until the start of January. But if you want to get on the wait list to then when we start in January, you can scan that QR code and get on the wait list right now. The reason why we do that, it's not a marketing stunt. We do it because so that way we can have a good chunk of people that we can devote our time to for 3 months of solid focus. So that way you get the best bang for your buck. You get what you're here for. You get a return from your time and your money that you spend. It's $100 for 3 months. It's not a recurring thing. And there you go. So if that's of value to you, you can scan that. And now I will say, stay grinding on your freaking goals, and never, ever, ever let anybody tell you that you can't do something they never done themselves. And I'll see you guys later. Bye, everybody.